You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
All right, everybody. Welcome back to Options Insider Radio, the interview program here on the old network, where we welcome on guests from throughout the world of options and derivatives and sometimes beyond, and proceed to pick their brains for the benefit of you, the listener. My name is Mark Longo, of course, from the aforementioned network, and I am pleased to be joined by our next guest. He is a newcomer to the program and indeed to the network. He is Evan Schnidman, the founder and CEO over there at Prattle. Evan, welcome to the Options Insider Radio program.
Great to be here, Mark. Thank you so much for having me.
And Evan, as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give us a little bit of an overview of your background and how you found your way to starting Prattle?
Yeah, absolutely. So I'm a recovering academic, shall we say.
We won't hold that against you here.
I
not too much.
My career. Oh, what's that?
I said we won't hold that against you, at least not too much.
Hey, it's okay if you do. There's a reason why I'm a recovering academic, not still an academic. So, no, a lot of what we do at Prattle is really rooted in the idea of automating the research process, and heavily influenced by the work myself and my co-founder Bill McMillan have done, both in our academic life and now professionally as well. And so we really, I started out my career as a game theorist, and during the financial crisis was modeling small group decision-making, specifically at the Fed, the most interesting small group of decision makers in the world, especially back in 2008, 2009, but I think frankly, even again, right now. And so, started modeling small group decision-making there, quickly figured out that unfortunately, market responses to Fed policy were not particularly a modelable problem. And I started delving into why that was, and quickly discovered that it was all about communication, about how the market responds to so-called Fed speak, or central bank speak more broadly, in idiosyncratic ways. And really looked at the state of the art in analyzing that Fed speak, and discovered that it was really basically the same way people read poetry. It's close reading. It's not scientific. It's not particularly a back-testable endeavor. And so decided there had to be a better solution. There had to be a comprehensive, unbiased way of analyzing these all-important market-moving communications, and really backed up and said, there's got to be a way to reinvent this wheel. And so delved into computational linguistics, specifically looking at sentiment analysis, and quickly figured out that the state-of-the-art in sentiment analysis was not going to cut it for analyzing something as complex or nuanced as Fed speak. So Bill and I put our heads together and ended up creating a methodology that mathematically models linguistic patterns and ties them specifically to market response. Obviously, this had huge implications for being able to model central bank communications all over the world, but we've now been able to apply that to corporate communications, and that's really where Prattle's taken off is analyzing not just central bank speak, but also looking at every publicly available primary source communication coming out of every publicly traded company in the United States. And in fact, we actually have built and maintain a unique lexicon for each and every individual company based on how the market has responded to that company's prior communications.
And this is interesting because we've seen obviously a lot of people tilting at this kind of real-time sentiment analysis for a variety of different aspects. Most people who've come on here in recent years and talked about their systems for doing this have been usually building it around social and trying to find the signal in all the noise of social and trying to do real-time analysis there. And we all know it's a challenging prospect. It's not an easy thing to do. It sounds like you guys have found an interesting niche within that, which is, of course, focusing on corporate speak and Fed speak, which maybe, when you think about it, maybe is a little bit more intelligible than your average social media user tweeting about Apple and whatnot out there. But it's interesting. And so you guys have to really spend your time, sounds like, building your database before you can really go out there and analyze and add a new company. Because everyone comes on here talking about their secret sauce. Would you say that's really kind of at the heart of your secret sauce there at Prattle? It's just doing the times, building the legwork first, and kind of building up the database to really be able to allow you to do this. And also, is this real-time actionable data that you're putting out, or is it more of like a report after the call kind of thing?
Yeah, so it is real time. So we're able to provide analytics. In fact, right now we provide it as soon as the call, for instance, an earnings call concludes. But we're actually working on a system right now that will actually provide scoring during the call, and you can overlay that with previous earnings calls. And so there's some really interesting advances in really it's the transcription side. It's actually not our technology. It's more the straight-ahead transcription and dealing with some of the voice-to-text aspects there. So I can walk through that tech infrastructure, but I think actually one of the important things to hit on is what you alluded to a moment ago, which is the idea of what's intelligible language, right? And I, for my 2 cents, I think that while social media can be indicative of things and indicative of particular moods in the market, it's rarely causal, right? It's usually a symptom. It's not the cause. And so one of the things that we think is really important here is, a tweet about a news article, about a research report, about that earnings call is unlikely to be the thing that is moving the market. The earnings call is likely to be the thing moving the market, right? And so one of the really important aspects of our system is we've predicated this on causal relationships, causal language, and knowing that, in fact, when a corporate officer gives a speech or has an investor day or puts out a press release, that's almost certainly going to affect price movement for that particular company. And so being able to build and maintain a unique lexicon based on that company's prior communications, the way a human analyst might, that's extremely important. I have a harder time pointing to that causal relationship from some of the social media tools out there. It may exist, but it often breaks down over time, whereas we know those primary source corporate communications are certainly holding up.
You're saying the words of a CEO may hold more weight than Twitter user 6842 saying he hates Apple? Is that what you're telling me?
It's a quirky supposition, but yes, that is exactly what I'm saying.
So who are the intended end users? You kind of mentioned a variety of different use cases for this. Who are the intended end users for this? Is it, the hedge fund manager out there who's looking for some actionable real-time data to trade? Is it maybe the analyst who's looking to broaden his repertoire of companies he can cover? Who are the intended targets, the end users for Prattle?
Yeah, it's an important question. I joke to our sales team that we have to be all things to all people, but in some respects it's true. We started out really operating as an alternative data company, focusing on the idea that we're providing directly tradable, actionable signals for people who are trading both in real time and have medium or longer term strategies. As it turns out, because we're automating analysis of these complex communications, because we're streamlining them and not just providing singular quantitative scores, but also providing all kinds of metadata on who spoke, what percentage of the time, the sentiment of every speaker, and we're algorithmically extracting the most salient remarks. So we're pulling out those couple of sentences that would traditionally go in an analyst report or in a news article about a communication. Because of that, we're actually kind of starting a line into talking to analysts as well, and really being an automated research company as much or more so than just providing a directly tradable alternative data signal.
Now, yeah, you mentioned, and obviously a lot of our audience lives in the actionable trading sphere, whether it's on the institutional side, the professional side, the asset manager side, kind of all of the above. They love their actionable trading data. So it sounds like you guys have something to offer for them as well, not just for the analysts out there in the audience.
Oh, absolutely, yeah. Everything we do is real time. So not only do we have our API if you want to deal with this programmatically, but actually we've built our whole system to be alert-based. We looked around at the world of research automation tools and alternative data platforms and realized pretty quickly that a lot of these things were built on end-of-day FTP or a RESTful API that somebody has to ping. But if you're a trader sitting there who just needs a quick hit of information to go execute that next trade or maybe keep you out of that trade, we think an alert-based system is extremely important. And so we have email alerts. We even have mobile alerts. We can do desktop and browser. We think that that's actually a really important way to consume information because I don't know about you, but I definitely have too many platforms to be logging into to keep track of what's going on any given day. And I think a lot of our clients are in the same boat there.
So it's just as simple as I know you have a mobile app, like you mentioned. So it's just as simple as picking up my phone, looking at an alert for, I keep using Apple, so let's go with Apple. Oh, sentiment analysis off the earnings call says we're turning bearish on Apple, and you'll get a bearish alert on your phone for Apple. It's really just that simple?
Yeah. In fact, the most simplified variation of our score literally represents the likely 10-day cumulative abnormal return. So how is that stock likely to perform relative to the benchmark over the next 10 trading days? So it's an obvious, easily intelligible signal, and then we provide residualized variations of that to sort of help people understand positive and negative. But yeah, it's a pretty straightforward thing.
Now, we know a lot of our audience, they find value in real-time market data. We've seen at the end of the day, one of the best predictors for events are markets where there's real money on the line. There's real analysis being done because there's real money changing hands. So things like the straddle and the implied volatility, these offer a lot of insight into the market, above and beyond what the couched words that a CEO might say and things like that. So do you incorporate any of those types of metrics into your models as well, looking at what the market is actually telling you in addition to what the CEO is saying? And is that all factored into the end buy sell signal, or is it more solely focused on just the speech patterns and the lexicon, as you said?
Yeah, so it's solely focused on the speech patterns. In fact, we take a lot of care to control for all of those other factors because our assumption is that most of your listeners, most of our clients already have pretty robust models built out to handle those things, but there's still, on average, somewhere in the neighborhood of 20% of price movement that's unexplained by common quantitative factors, and that's what we can tie directly to those linguistic patterns. And so that's really what we've built our system to do. So you don't have to dial into that earnings call to pick up on that incremental price movement. You don't have to throw a bunch of new variables into a model that suddenly becomes a garbage can because you had to add in so many variables to pick up that variance. We're actually expressly modeling that stuff that is attributable only to the language.
Now, you started your career and much of your company kind of analyzing Fed speak. So we are talking today on a Fed day. I'd be remiss if I didn't ask you if your models or any of your prior analysis of the Fed has you leaning one way or the other in terms of, the big question now is the Fed going to keep a pace with its planned schedule of rate cuts, or is, the current market volatility, is that going to maybe cause them to take their foot off the gas a little bit there? Any insight coming from your various models and your analyzing of Fed speak lately?
You couldn't ask me this 12 minutes later after the decision.
That's too easy, right?
It'd be too easy. No, our models are pretty clear on this right now. We expect that they will hike rates 25 basis points today, as planned, as the market has largely priced in. But it's decidedly going to be a dovish hike. So what we've seen from Fed sentiment over the last 3-4 weeks has been it's gone from being decidedly in hawkish territory to almost perfectly neutral. And what that tells me is that that relatively steep decline, while they've basically been signaling they're going to hike this go around no matter what, that likely means there's going to be more dovish language both in the FOMC statement and in Powell's remarks, but perhaps more importantly for the market, the summary of economic projections, the SEP, is likely to reflect the downward revision. Central tendency was 3, almost 4 hikes for 2019 before. I expect that we'll see central tendency drop to 2 hikes with some skew to 1 and 3 and almost nobody at 4. So I think that they're still going to show they're going to hike rates in 2019, but it's going to be a much, much slower rate path.
It does seem that's what we're seeing out there in the market sentiment as well. Things like the Fed Watch data and everything else, all kind of leaning towards the Fed. Today is still kind of a bit of a coin flip. I think they're leaning towards them doing it, like you said. But going forward, definitely seems like people are leaning towards taking the foot off the gas a little bit. Well, Evan, you guys have been analyzing a lot of data for quite some time now, a lot of earnings calls, a lot of Fed speak, but also a lot of corporate speak. I'm curious if in all that time and all those algorithms you've been running on various speech patterns and building databases of lexicons, if there's been any surprising or weird takeaways you found. Like, for example, I was looking around and I saw that you guys found that if the CFO speaks for a larger percentage of the call versus the CEO, it tends to dampen down volatility, which is kind of interesting. Any other little nuggets or gems you guys have found from crunching these numbers all these years?
Oh yeah, absolutely. There's some really interesting ones. Yeah, so there's some things about language that people intellectually just don't think about, right? So for instance, when you're looking at the central bank world, what's the most meaningless word in a Fed communication? It's the word inflation. It shows up in every communication. What matters most is the words around it. Perhaps the most interesting thing is, so Mark, what's your middle name?
Stephen.
So when your mother referred to you by Mark Stephen Longo, right?
Chances are it probably wasn't good.
Right. So what's interesting is this is a common linguistic pattern that people don't realize they're doing in an effort to sound formal, in an effort to sort of keep some distance between that executive and maybe an analyst asking a question. They may actually use the full name, first, middle, and last name. That actually tends to lead to negative sentiment. So there's some interesting outcomes about using full names, and it goes back to how our brains process language. When we hear first, middle, and last name, we all go back to our mom yelling at us as a little kid, right? And so it's one of these odd things where unless you're somebody who always uses it, right, if you're always using full names, it gets washed out as being neutral because that's just your pattern. But generally speaking, if you go from an informal, just using a first name or just using a last name, to using full names, that's actually an interesting negative signal that you're bracing for something, or you're creating a level of formality and distance there in the language.
I like that. Maybe that's a good blog post from Prattle on some of the strange behavioral findings and weird uses of language that actually have more relevance than you might think for things like economic analysis, which is something. Yeah, you're right. Whenever someone hears their full name, they get the cold shivers of their mother, memories of their mother yelling at them as a child. So there probably is a lot to that. Well, Evan, before we wrap up here, I'm just curious. We talked about the Fed, talked about some of your interesting findings from corporate. Anything else you have maybe on your radar? You guys have been crunching a lot of numbers. We're obviously coming into the end of the year here, looking ahead to 2019. Are any of your signals maybe in aggregate telling you anything interesting about the economy? Maybe the sentiment in broad perspective from the CEOs and companies out there is it turning for 2019? Any outlooks you can give our audience coming into the new year?
Yeah, I think the big storyline for 2018 really has been tariffs, right? And how has that affected both earnings but also future earnings? And really the impact, I think it's been most acute on the industrial sector. You look at companies like Caterpillar, that's been pretty obvious, where they had great record quarters at the beginning of the year, and all the while signaling that things were going to pull back as a result of trade barriers. I think that's percolated up. I don't think that's a surprise, but it's really interesting how many across sectors where how far we've seen that. Perhaps the most interesting and telling signal is not that earnings calls have been pretty middling sentiment recently. It's actually that the other corporate communications, the things that are less tightly controlled by investor relations officers, have trended a bit downward. And those tend to be a leading indicator of where earnings are going in the future. And so, I think as we start to see elevated risk from trade barriers and potentially slowing growth globally, it looks like some of the 5 million plus documents we're processing every day that are not earnings calls, it looks like those are actually really impacting or indicating the impact of that trade war.
Well, I'd be remiss if I also didn't ask you. Obviously, we talked about funds and asset managers and institutions and analysts. We have a lot of those floating around in our audience, but we also have a large cadre of very active retail and individual options traders who also enjoy getting themselves some buy and sell signals on various names. Do you guys have a version of Prattle, maybe a scaled down offering for them?
Yeah, absolutely. You can go directly to our website, prattle.co. And just hit the get started button and sign directly up, and we're glad to walk you through the various options there, and whether you want to sign up for just looking at one company or you want to look at all 3,000 plus that we cover in the U.S. alone, we're glad to have any and all variations thereof.
Well, I'm glad to hear that, because sometimes people come to us and they only have, a flavor, a version for one or the other. They're only aimed at retail. They're only aimed at institutions or asset managers or things like that. It's nice to see a platform starting off with various versions, because there are many flavors out there in the financial space, and I've often said you're foolish if you ignore any of them. And so I'm glad to see that you guys aren't doing that. Well, Evan, it's been a fun time to chat with you. I know we all have to wrap up soon because the Fed's coming on, and I don't want to pull you away from your Fed speak. But that said, we had kind of a long, kind of far-reaching conversation. If there's anything we left out, or maybe you want to leave our audience with a little bit of a hint, a little bit of a tease for what's coming down the pike from Prattle here in 2019, now is the time, sir. The floor is yours.
Yeah, absolutely. I think the big thing to convey here is really, we think that the alternative data space is starting to bifurcate. It's really seeing that there's high quality product out there. There's really, really valuable trading signals. And there's a lot of data exhaust, a lot of things that have become commonplace or perhaps not as useful. And so we're really dedicated to building high quality signals based on the analysis of things that human beings have historically considered knowledge work. And so our goal for 2019 is take what we've done in the U.S., analyzing all publicly available corporate communications, and expand globally, really push into Europe and Asia. And we think that's, especially in the MiFID II world, there's going to be value in being able to analyze these things efficiently and quickly, both for trading purposes and for longer-term investment signals. So definitely keep an eye out for that as we roll into 2019. And I think that's where Prattle's headed.
Well, Evan, it's been great having you on. I'm looking forward to seeing how all these offerings from Prattle unfold in the marketplace in the coming months. If you guys want to check it out for yourselves, he mentioned head on over to prattle.co. That is the website. While you're at it, give him a follow over there on Twitter at Prattle Data, DATA, Prattle Data for more. And we'll see you back here very soon for more Options Insider Radio.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.